Hello SwissBorgers, it's Paula and I'm here with a completely new weekly setup. We're gonna kick it off as usual with the news of the week, or more of what hot titles we're seeing out there from the previous week since we're recording that on Mondays. And then we're going to continue to a bit of a macro picture, or what are the central banks around the world up to. We're in a high or more of rising interest rates environment right now, so it's really important to follow what is the monetary policies of those central banks, as well as we're going to focus a bit more on the inflation data, which is directly related to the interest rates. And then we're going to wrap it up with insights directly from us SwissBorg Ventures, or more of what private deals we are seeing happening out there. We're gonna pick every week few deals that we feel it's worth sharing. It's the usual investment horizon of a blockchain VC is between 24 to 36 months. We think that those will help you identify market trends that are about to come in the next, let's say, 1 to 3 years. Let's just go right ahead into it. We started with the news of the week, and a news that is directly related to Dubai, where I'm based out of, so I'm always excited to share those. The head of crypto in PricewaterhouseCoopers just left to set up his own firm here in Dubai. He raised $75 million from a fellow hedge fund called LMAX Capital, and the manager chose the jurisdiction particularly because of the favorable regulatory policy. And I really think that this is a great example of how setting up the right environment attracts so much business and investment. LMAX Capital is the last of multiple companies that set up headquarters here, and in the crypto space some of those are Binance, OKX, as well as Kraken. The second news comes from BetaShares in Australia. They just launched their first metaverse themed ETF on the Australian Securities Exchange. This is following the launch of the crypto-themed fund by Charles Schwab last week. And just same as Charles Schwab, they're not holding any crypto directly, but it's more of companies that are related to the metaverse sector. And particularly, the ETF is following the Bloomberg Metaverse Selective Index, which is consistent of 32 companies giving exposure to the metaverse sector, and those companies are a bit more traditional or more conventional, let's say. You can see between them Nvidia, Roblox, as well as Meta platforms. And we continue with another news from an institution, and I'm really excited about those because they just show you how the sector is growing, the rate of adoption, and the future growth rate. This one is from BlackRock. They selected Coinbase to provide access to crypto trading and custody to their Aladdin clients. Aladdin is their institutional platform, and such a partnership is very crucial because it will also provide access to the Aladdin platform to the Coinbase users. The service will start with Bitcoin only, but in future they're gonna roll out additional functionalities such as crypto trading, prime brokerage, as well as reporting. And I think I spoke in a previous video about how important reporting is for the industry, because currently the institutions are booking all of their trades under the same asset class. And if we have detailed reporting in terms of sector, like separated trades for DeFi, for GameFi, etc., this will really help the efficiency, the price efficiency in the sector. So this is way bigger step than just a partnership. And the last news of the week is not so fortunate one. There was an ongoing attack on certain wallets that resulted in Solana and USDC being stolen. So far, it is reported that it has been around $5.2 million and more than 8,000 wallets were affected. However, this is not breach of security on the Solana network, but more of the wallets where those assets were held. And these wallets were on Phantom, Slope, as well as Trust Wallet. Macro talk. The US inflation rate became a key macroeconomic indicator lately because Fed is basing their interest rates policy on it. Initially, Fed had a very healthy target of 2% inflation, which unfortunately is long time surpassed. Currently, we're standing at 9.1%, and the analysts agree that we're going to be expecting around the same inflation for the month of July annualized. What does this mean? If we get more inflation than 9.1%, what is the expectation? Probably Fed would be hiking the rates again in September. And the contrary, if the inflation starts going down gradually, then we'll probably be moving to a healthier economy, and then the Fed will be moving to a bit more of a loose monetary policy. Based on the monetary policy, people are more encouraged to save or spend. Basically, when the interest rates are higher, you prefer to save your money instead of spending them or investing them somewhere else, because this is risk-free interest rate. However, this affects the money supply in the market. This would mean that when there is more money into savings, there is less for spending as well as for investment. And this affects all asset classes, from equity, fixed income to digital assets. Since inflation is rising globally, most of the central banks have the same policy. As you can see in the second graph, the Central Bank of UK also hiked their interest rates by 0.5 percentage point, which is the highest the rates had been hiked in the last 27 years. And this is probably the highest the interest rates had been since 2010. This policy change was followed also by the European Central Bank, which also hiked the rates, and now they are first time at zero and not negative all the way since 2014. We had been in this questionable economic environment in Europe for a long time, and many investors were criticizing having negative interest rates, which basically means that if you put your money into a bank account, you're going to be losing money instead of making money on your deposit. And consequently, this affected the prices of the fixed income and equities based out of Europe. But now we're first time in zero interest rates, and they're expected to continue to be hiked based on the pretty much fast growing inflation there. So these are the things to watch out this week in the markets. And we move to the last section of VC Insights. Venture capital. I cannot help it but start with a deal that we're so excited to participate from SwissBorg Ventures. This is Cross the Ages, an NFT cards game that just closed their seed round of $12 million. And some of the investors were giants such as Animoca Brands, The Sandbox, as well as Unisoft. Just from the lineup of investors, you probably can feel what an exciting project that will be. It's an NFT fantasy cards game, which is based on the 7-book saga carrying the same name. The cards in the game will be represented by NFTs, which the users can later on trade as well as exchange for physical cards and collect them offline. The team is just as impressive. They currently have more than 140 people working on the game, and 70 of those people have extensive gaming experience in names such as Harry Potter and Lord of the Rings. If you want to know more about it, I'm leaving here a trailer to the game, as well as later on this week, our managing director Shane Kehoe will be talking more in depth about the deal and what we can expect from Cross the Ages. We move to another impressive deal that happened last week, and this is Unstoppable Domains, which raised $65 million in a Series A to make website domains into NFTs. But the exciting part of it is that they achieved the unicorn status. The round was led by Pantera Capital, but there were tons of VCs from the industry such as OKX and Spartan Group. The Unstoppable Domains is a very interesting project. They launched in 2018 and they raised only $7 million in funding. However, they achieved a lot with it. And at the moment of the raise, they had 2.5 million domains registered already, and the infrastructure on the website was allowing the users to access more than 150 Web3 applications, which means that the users were not only able to purchase the domain, but build decentralized websites and build their own Web3 identity. Digital identity is a big trend in 2022, and as you see, the sector believes in it and supports it. And the last announcement of the day comes from Celeste, which is an institutional lending platform. With lots of the recent unfortunate events in the lending industry and lots of filing for bankruptcies, we were probably expecting a bit of a slowdown in that industry. Instead of that, we are seeing very constructive developments, and Celeste is the living proof of it. They're having an innovative model for managing collateral, so they prevent such black swan events. And the support for such models is seen by the majority of the industry that participated in the round. They raised $5.3 million in a seed round led by Spartan Group, but most of the VCs in the industry participated, such as Kraken Ventures, Coinbase, as well as Digital Currency Group. This is all from me this week. Thank you so much for listening. If you like that video and the content, please give us the thumbs up, and looking forward to seeing you next week.